Peace and love from Ronnie Mad of the True Trading Group. Welcome back to the channel. Uh, if you haven't already, can you do me a big favor and hit the like button and hit the subscribe button? Then click on the bell so that you can get notifications when we go live. Um, this week, we're going to be doing a little technical analysis. We're going to be looking at a couple of charts, actually. And today we're going to talk about. So last week we talked about support and resistance, basically on a horizontal level, And in that video, I explained how the bottom or the floor is support and up top is the resistance. And I also stated that resistance basically means this is where selling take place, and support is where buying takes place. Well, today I want to take it a little further and now talk about trend lines and channels and how if you could trade with a basic understanding of support and resistance, and then with trend lines, you could take your trading to a whole nother level when you're trading within a channel. It gives you an edge, if you will. So hit the like button and let's get started. I want to go look at a couple of charts that I marked up already. And I just want to show you, I'm going to use SPY at first because something happened today while I was trading SPY. I was looking at SPY at the open, and I just want to show you all how trend lines play a major part in your trading. It could give you an edge. So with channels, it's basically as opposed to being horizontal, like we talked about last week. This week we're going to talk about diagonal support and resistance. And channels are identified by, theoretically, they say 3 or more touches to parallel trend lines. But I refute that a bit. And I'm going to get into that in the video. I don't think you need 3 touches. It's great. 3 touches, it just solidifies a channel or a trend line. But you really only need 2. And I'll get to that, though. And so a break of the channel, when it breaks out of a channel, that will render the channel's bottom as the resistance and its top as the support. So a bullish channel, for instance, is characterized by higher highs and higher lows, while a bearish channel is characterized by lower lows and lower highs. And we're going to go over that today. I'm going to look at a bullish channel, and then we're going to look at some bearish channels. So let's get started and by looking at SPY. All right, now I cleaned my chart up because I want you to see, just like last week when we were talking about horizontal support and resistance, where we were making marks whenever you saw sharp breaks like this, when you saw a reversal in price action, you would draw your horizontal lines to measure to mark off the levels of support and resistance. Well, it's the same kind of concept with trend lines, but it can be a little tricky. So let me put my drawings on SPY. I trade SPY a lot. Always refer to it because I like to know which way the market is going, and SPY kind of gives you, SPX gives you a good idea of the general overall how the market is. Now, this may look very crazy to you, and I can understand why. but it's going to make sense in a minute. Um, hmm. Let's use, so you see my trend lines is basically with the trend line, you want to start at your highest points. Now, here's the thing, right? I'm using the daily chart, right? However, you could go out just like last week we talked about marking up a using our markups on a higher time frame, right? You could also do that with trend lines. You could come and use these higher time frames and get a better gauge of it. But by doing that, look at this monthly chart. We have no touches until all the way here. Uh, for a long time, we don't have no touches. But if I wanted to, I could put. Let's do it. I could put a trend line right here at this high right here and run it up to this touch right here. Basically, that's a whole nother channel. It's trading right here in this channel. Um, so that's how. Let me go to the smaller time. Let's go to a weekly time frame. See that? This is the line I just drew, and I really don't like this trend line because it's not really touching. I want it to ride. So I would probably move that since that's what the monthly chart told me to um, mark it up at. Well, if we come over here, well, if we come right here on the weekly, we could put it right there, and we got some touches here. I could put the channel like right there. Right now, so what you want to do is you want to you mark your channels up by going from these low points, and like I said, they say 3 touches. I say 2 because once this got right here, you could have moved the channel right here, um, right here to this first line. That's when I drew it, and everything traded within that channel. Let's look at the daily. I like to use the daily because I think it's more accurate. It gives you a better overall perspective than using the. Now, sometimes it works on the weeklies, but a volatile stock like SPY and how SPY runs, it's probably best to use a the daily chart to get a better accurate feel of what's going on. Because see how this looks? This is that same trend line I just drew, and it looks crazy way over here somewhere. It's not really touching anything. So that's why it's best to use the daily. Okay, now let's get to it. So I went from this high point and drew my channel. Um, I actually moved this channel. For some reason, I moved it right there. Um, and we got bounces off of there. But I really didn't want to show you because this is not the one I wanted to show you for this video in particular. But I did want to show you how here we have a channel right here, and then we have it trading a channel within a channel right here as well. This is a channel as well. But what I wanted to show you was on a smaller time frame and how I was able to trade today. I traded SPY based off of this little small trend line from yesterday's high, and I took it to the pre-market high, and I let it touch, and I just ran the line through for the day. Now, I also had from this bottom to this bottom in pre-market, and that caused a little pennant right here. So based off of my first candle, in another video about entry, I'll talk about the first candle, how that could give you a general idea of what the market is going to do. This first candle, this red candle, is pretty. Let me blow it up a little bit. It's this first candle is pretty. It's a neutral candle. It's not telling you. It's not strongly pulling in any direction. The body is right here in the middle, and you got two big wicks on it, so it's kind of like a neutral candle. So, however, it came up and touched my trend line right here and retraced. Okay. And that was just off of, and eventually it broke out of the channel. Now, breaking it out of a channel or a trend line, you would need two candles at least breaking out and closing outside of the trend, right? So we had two green candles. This candle, and then we had a plunge right after that, right back into the wedge, and then right through the wedge. It broke those trend lines. Now, those trend lines are not going to be as as strong as a trend line that you have on the daily chart, right? So by me having that floor, and this is an old trend line from all the way back here in January that I ran. And I just basically used two touches. And we see that when price did come down here and touch it the third time, what did it do? It retraced sharply. And it hit the other side of the channel that I drew from here to there, plunged again, touched the trend line on the it actually didn't touch this trend line, but this trend line right here, getting confused. It did touch this trend line and it went back, pivoted the other way, and broke out of this channel. But it had been trading in this channel from March 29th, and it broke out May 25th. So by having these trend lines, you can sit up here and play it and run it. And we had 2 months worth of price action within this little trend line right here. This channel right here. Okay. Price broke out, consolidate. And then finally we had that big drop. And it actually came right back to I drew a new trend line from this low to this low. And it came right to the trend line. This is without me even doing any babysitting the chart, right? By me just putting this trend line right here and touching from this low to this low and just drawing it out, price came right back to that trend line. So once price began to drop, it makes it easier for you to make decisions on your trading, because we had a big drop this decline started from 416, right? Now, it got down here to touch this trend line at the 374 level, right? Now, after a big drop like that, what is that? That's a $40 drop, right? Well, we know it ain't going to just, the market ain't going to just bottom out and just continue to fall. It has to go up at some point, or have a few resting bars in between that before it continues to go down. And that's what it did. But by me having these old trend lines, as you can see, I never remove trend lines. Some people say after a certain amount of time, some people would say that I probably could remove this trend line here once it broke out. And I can agree with that, but let me see something. What if I extend it? What if I extend it out and price ends up dropping right back into this same channel? So I don't get rid of mine unless it becomes obsolete. Like this one here, it's probably obsolete. This trend line here is because price is way down here, over here somewhere. It's probably not going to get back. Because this trend line was at 500 way back in January. It's probably not going to get there, right? So this one's probably obsolete by now. But by keeping trend lines, by drawing your trend lines, it gives you an edge on knowing where the support in this case is, or where the resistance is in this case, the ones that's up top. So this can help you a lot with your trading just by, and like I said, I showed on the 15-minute chart by me just using trend lines to kind of give you an idea of how the price action is moving. We hit our trend line. We hit this old trend line today, and it reversed, right? That trend line that I drew on the smaller time, on this 15-minute chart, it blew right through it, you know. But I knew it was kind of weak because it did it once. It went through it once. And so what I'm saying is that can help you and give you some type of an edge in your trading. It can help you notice when things are pivoting. So here you go. SPY pulled back $5 here. I was in this trade. And now you start going sideways and you see it kind of trying to reverse and it's consolidating in this area and whatnot. Well, there's a chance that if it's not even piercing or penetrating this trend line, that means that it's holding. Look at this trend line. This is an old trend line, by the way. Let's go back here a couple of days ago. It came up. It didn't quite touch it. And again, support and resistance isn't a particular price number, right? It's not a particular number. It's a space. It's the same with a trend line. It doesn't necessarily have to touch, but it did go up here close enough, and then it reversed. And then it came back again and retested it, and then it reversed a little bit, gapped down in the pre-market, and then it surged. It gave it enough power, and it hit this trend line that I drew, and it popped and broke through. It pierced it. It didn't even touch it here. It pierced it here, and it ripped right through it this time. Okay? And just like this trend line was once resistance, now it becomes support. Look what happens. Boom, bounce. I'll draw another trend line. Because it reversed right here. That means this was resistance. This is resistance right here at this level. Bounced, came right down and straddled this whole trend line. This is an old trend line, guys. I didn't just draw this trend line. This trend line is old. It's been sitting up here on this chart for months. From all the way back here when I drew it in February. See what I'm saying? I drew this trend line in February from 2 touches and let it go. I had no idea that on May 12th, it would come back down and retest it. I had no idea that I didn't have that idea back here in February, but I'm going to draw my trend lines when I see breaks. I'd rather trade diagonal channels and whatnot as opposed to, I don't do a lot of markings with horizontal support and resistance because I can kind of eyeball it. But my trend lines, I like to have those because it gives me an idea of when I could see when a reversal will happen. Now, that is not the chart I wanted to do. I didn't want to use that one. I wanted to use to show a bullish channel on Adobe and show you how it was a time a while ago, man. I wasn't doing nothing but uh, I was putting out plays for the trading group on Adobe, and it was basically based off of these channels. This is actually this is like my baby. I haven't erased those or nothing like that. This is kind of like my baby. This is my first channels. My first trend lines that I ever used was on this chart, and they're not, necessarily. I don't know why this is looking like this, but let me do something. That should be a lot tighter than what it is. See how it looks a little different when you're. Now, here's another thing I want to touch on. Now, some people say that you shouldn't use the wicks. You shouldn't use the bottom and tails or the top and tails when you're drawing your trend lines. You should use from the open or the close of the candle. Um, I tend to disagree with that because, all wicks matter. You know, uh, price actually went there. So I'm going to use that um, in my charting. Does it have to be right and exact? Not necessarily. So let me get back here. See, I drew this from the low of 2020 when the market tanked. I drew my channel from there. I let it touch there. You see the wick right there? See that touch there? Now, I probably should have it a little tighter. This is where it technically should be. I don't know how it got moved, but there we go. See that channel? Just from going way back. I'm sorry, it's because it's kind of hard to show. All right. There's our low when I started it. And this was my first channel, so I kind of eyeballed it and put it right there. I could have put it right here or whatever. It's still a channel. Basically, when price came down here and kept touching, it popped, came back down, retest, popped a little bit, then it popped big and it got up here to the top of the channel. And you can make a lot of money trading in these channels. All right. That's a better view of what was going on. So now it's easier. Now you're inside of a channel. It's easier for you to determine uh, the price action. Now all you have to do is pay attention to your candles. Are you creating? If it's a bullish channel like this one is, are you creating higher highs and higher lows? Because that matters, you know. And paying attention to. So now once you see this consolidation is getting weak, well, you know you're coming down. So you grab you some puts and you ride it right back down to this channel. Up, it kind of broke, pierced through a little bit, closed below it a little bit, but then this is really just some consolidation. And eventually we got a break to the upside. They went to earnings, pop, went to the top of the channel. Never broke out of the channel. This went on from 2020. We was able to trade in this channel from 2020, March of 2020. Well, wasn't March to 2020. It was I would say around June or something like that. All the way up until December when it finally broke out of that channel. Okay, so there's a lot of money that you can be. Look at this. This was I remember this as if it was yesterday. It had rolled up here, straddled this channel, and just consolidate, and consolidation. When a stock winds up and goes sideways for days, is getting ready to make a big move to one side, in a particular direction. And I remember paying attention to this trend line and all this consolidation right before they went to earnings. And I grabbed some lotto puts on Adobe and and I said it was going down here. And I'm sure people in the trading group was probably looking at me like I was crazy. But look at what I had going on. Whew, big gap right here. Right? Big gap, big gap right here. And it had been winding up in this little zone for weeks. Went to earnings, plunged from what were we, about 650, and eventually it got to a low of 550, $100 drop in a matter of, what's that, about 2 weeks. About 2 weeks, just off of, I would have never thought to do that had I not had my channels. Yeah, it was risky, but my thinking was, if it wanted to break through this channel or back to the top side of this channel, it probably would have, because it had enough opportunity. This is like 3 weeks, maybe nearly a month of consolidation. If it wanted to break to the upside, I believed it would have. So that's the edge that I'm talking about, just by trading channels. Here's another one, Costco. Same thing. This was a bullish channel. I probably should have used Costco instead of showing you my horrible lines on my first time I used trend lines. But here we have Costco, same concept. What did I do? I went to, now I'm sure this looks weird right here because I'm sure I used the weekly chart for it. There we go. Yeah, see, I used the weekly chart in order to draw that. Again, let's get back to the dailies. It's a little more accurate. Again, all I did was start from a low, from one of the lowest of lows, and then I put it right here. Or you could theoretically say that this was the first touch, right? But I put it here. And then I started from this high. And look how long it took before it got back to the top of this channel. This was the second touch. So boom, I created a channel. This is the first touch. Bullish movement, higher highs. Then it gets weak, comes right back, retests. And sometimes it'll go outside of the trend line. You see it did that here, but we don't see any drastic movement to the downside, right? And typically when it breaks the trend line or whatever, I kind of leave it alone until it chooses its direction, because sometimes it's a pump fake. You got to understand, this is still a bullish channel, right? And at the markets was pretty healthy around this time anyway. So there was nothing that was telling me that that we would make a huge move to the downside. But when it breaks out of the trend line, I don't want to touch it. I don't want to be bothered with it. Some things you could just walk away from, because if you've traded it, if you've stayed in these trades, because look at where we are. Look at where price is right here. The low is 379. And all the way up here to a high of 469. Okay, that's $100 move just off of a bounce within a channel. Okay, now it gives a peekaboo. It comes back into the channel, pulls right back out, and then it wide ranging bar right here gets right back into the channel and begins to surge. And before you know it, you look up and it's at the top of this channel. This is when I created the top, because I had a trend going on back here. And you could say that these are touches, right? I just drew a trend line right here. And months later, I drew the channel way back here. Matter of fact, months later, price went, and what was this? This is April of 2021. This is November of 2021. Price came right back to the top of this channel. All right. So it could be pretty profitable for you just by putting trend lines. The trend is your friend, right? Use the trend lines to help you get an edge on reversals. And check this out. Here's another piece for you. It could also help you with your stop losses, right? Let me just say this, right? So we get a pullback, a topping tail off of the trend line, right? So you should already be thinking this thing could reverse, right? What day is that? November 29th. Now, November 30th, it gapped down a little bit, went and retested. Now, once you see this, that it retested this high and it didn't take it out, you enter your puts and you put your stop loss right here and you ride it out. It can help you by trading within a channel. What I'm saying is it can help you with your stop losses and whatnot and your exits. Because once we reversed, let's look at here. Once we popped right back in here, you get in calls. Now, let's just go with this candle here. The low was 460 on this candle. Now, if you bought time because you know you're at a support level, it has retested that support level twice right in this area. You get in right around here, low of 460, a high of 467, and you buy the time, and this was in October 19th, to November 29th, you could have rode this thing to a high of 560. That's $100 move based off of trading off of a channel, a pivot off of a channel. Bought the time and let it rip. All right. So just wanted to share. Hopefully this video is helped somebody. I know sometimes, it may sound like you're helping somebody and it may be a little confusing. So please feel free to reach out and ask me questions or anything. You could reach me on all of my social media. I'll make sure I put my link tree up so you can reach me there. But before I leave the video, I want to also talk about trading a breakout. Trading the breakout. We got it pulling back and then it breaks out. You also can make money trading these breakouts because once it breaks out, let's look at this first candle where it closes actually outside, of the trend line. The low is 501 on this candle, and then the low right here is 469. So we're talking about a $30 move just off of a breakout, just off of it breaking out of the channel. So there's plenty of ways you could play that. You can trade out of channels, and I also showed you with SPY. Sometimes you can trade a channel within a channel. Like this is a channel, but then this was a channel as well. So leave a comment. Let me know what you think. If this video has been any kind of a help to you, let me know. And I will be getting back to you all pretty soon. I don't know exactly what I'm going to talk about next week. Let me know what you want to hear about. If it's something about technical analysis that you would like, or video, a subject you want me to cover, let me know. Reach out, and I'll get it done. All right. Peace and love.